Welcome to Caliente Topics. This is your daily tax webcast. My name is Veronica Rosso from MNMTaxman.com, and I have Patrick Russell, EA, as well from MNMTaxman.com. On today's webcast, we're going to talk about investment fees. Right, Patrick?
Very good, Veronica. So let's start off with the bad news first. Those investment fees, admin fees, management fees, custodial fees that you will typically find on one of the back pages of your Form 1099-B, that tax form you receive on all of your security trades investments for the year, that's been suspended. Those fall under the same category that we've been talking about recently, your Schedule A, miscellaneous itemized deduction subject to your 2% AGI has been suspended. Has not been able to be deducted since 2018. Very good. So that's the bad news, but there is some good news. So there's something out there in the investment world called margin accounts. Simply put, that's when you have a brokerage account with a value of a portfolio that somebody is willing to lend you money using your stock portfolio as the collateral, correct?
Yeah.
Now, this is called a margin account, and any trades that you make on this is still subject to the income that you earn depending on how successful you are. However, with the margin account, just like any loan or any line of credit, there of course comes with the interest for the charge of the use of the money. Now, this interest expense is not considered just a typical administrative management fee. This is a true use of your capital in a deductible manner that can be claimed on the form 4952. So the 4952, for all of you do-it-yourselfers, would be the form that you would use to calculate how much of your interest that you paid in the year on your margin account can be used to deduct against your income. Now, Veronica, question. Is there a limitation on how much of the interest expense you can claim in 1 year?
Yes, there's up to the investment income.
Absolutely right. You have an investment income limitation. Now, if your interest expense for the year exceeds the income of the year, don't fret. You don't lose that interest expense. It simply gets suspended and carried forward indefinitely. But remember, that investment income limitation does carry out throughout the life of that suspended expense. So, unfortunately, the couple $100 that you would typically find on most management accounts, investment accounts that you would see on a given year, those small nominal expenses are still not deductible. Now, according to current provisions, the Schedule A miscellaneous deduction subject to your 2% is suspended up until 2025. So unless something changes with President Joe Biden's new tax provisions that directly affect this line item, we are expecting to see its return on the 2026 tax return.
Okay.
Guys, very good. So just keeping in line with our new hobby, or I should say line of business interest, which is day trading, that we're going to be taking very seriously moving on. And so now just brushing up on all of those investment expense items that may or sometimes may not be deductible on your tax return. Guys,
remember, guys, we're not lawyers. This is not a paid consultation, but if you need a consultation, please let us know. You can send us an email to mmtaxman@gmail.com or text message to 562-756-9924.
A quick way to get a quick answer is by using the comment box below. Guys, don't just subscribe to the channel, even though we will be doing this pro bono tax workshop on a daily basis. But lend your voice to the show. It'll make it a whole lot more fun. Guys, happy Taco Tuesday.